Everyone's been talking about the Bitcoin treasury strategies, and it seems like everyone is forgetting about what's happening with the United States Strategic Bitcoin Reserve. But what if we told you that the US government may have already acquired Bitcoin and hasn't told anyone? Yes, we might be in some speculation territory, but Bo Hines just testified about the United States Strategic Reserve, and I want you to pay very closely to what he says in this clip. Let's rip it and get into the show.
There are a lot of different actors that held on to some Bitcoin in some fashion or another. Now the process begins in terms of establishing the reserve, the actual infrastructure behind it, and getting all of that accomplished. There's nothing in the EO that mandates that report become public, but we could choose to make it public at some point. And we are certainly keen on the idea of accumulation. We've stated publicly that Bitcoin is digital gold. We believe it's in the best interest of the United States to garner as much as we can possibly get. I've said that at every conference that I've spoken at in the last 2 to 3 months. Now, obviously, this has to be done in budget-neutral ways that don't cost the taxpayer a dime. The president was clear about that in the executive order. But I think we have some very creative minds, 2 of which are sitting up here with me. And I think we'll begin moving very quickly on that.
Okay, so maybe you didn't catch it there, but I will break this all down for you. And of course, I'm not alone. I have Luke with me, probably the most bullish content creator in YouTube, period. And then we have Kenobi, who's a Bitcoin mining analyst working for Demand Pool, the first fully Stratum V2 pool. So we got a jam-packed show for you guys, but let me break this down for you guys. So again, you heard Bo Hines there, and I don't think you caught it, but he said a few important things. One, in particular, that, people are continuing to hold their Bitcoin. We all know this idea that where the United States, with the executive order, essentially said we're no longer going to sell seeds Bitcoin. So we know that's happening. We heard him continue to double down on this idea of, hey, we're going to find budget neutral ways to acquire Bitcoin. But there was one point in the middle that made me think and connect this to an article that we dropped literally the same day. And it was titled, "How Many Bitcoins Has the U.S. Government Quietly Bought Ahead of Its Strategic Reserve Reveal?" Now, do you know what I'm talking about here? If you heard him correctly, or rather if you were listening closely, he basically said, all of this market structure, even our buys, reading between the lines, we don't necessarily have to reveal this to the public via the executive order. Now, we've all been wondering a few questions. What is going on with the audit of the Bitcoin reserve? Do they even have the Bitcoin? Are they still going to continue and buy Bitcoin? What are these budget neutral strategies? What are they actually doing on the back end? Well, we dropped this article, and I'm not going to read the whole article, but please go to our Substack. We've been dropping some fire over there on our Substack. So simplybitcoin.substack.com, and you can see all the different ways of potentially buying Bitcoin, or rather acquiring Bitcoin. Some, of course, as you know from the executive order, is this idea that any new seized Bitcoin in 2025 is no longer going to be sold, and it's going to be added to the strategic reserve. That's one of the ways, and just some guesstimates, just kind of speculation. That could be roughly around 10 to 20,000 coins. Who knows? We're just kind of throwing some numbers out there. Then, of course, these budget neutral ways, and some of those could be, selling treasuries over the counter. There's financial trickery that they can do to essentially not expose the fact that they are buying Bitcoin. Again, go read the article, but I'm going to give you the conclusion from this article because I think it makes what Bo Hines said come a little clearer in picture. Going to the very bottom, at the conclusion of this, we wrote, in summary, it is highly plausible that the United States government has been quietly adding to its Bitcoin holdings since the strategic Bitcoin reserve was announced, and certainly keeping every coin it can. All signs point to a concentrated effort to accumulate a significant, aka a non-trivial amount of Bitcoin under the radar, given the incentives of those in power and the strategic rationale of, quote, buy early, announce later. While exact figures are unknown, the U.S. likely holds well above its initial 200,000 Bitcoin that was seized base, and possibly tens of thousands of Bitcoin or more. And furthermore, the U.S. government's quiet Bitcoin accumulation aligns with historical precedent of strategic asset stockpiling, such as gold reserves in the early 20th century, when the Treasury discreetly amassed bullion to bolster economic dominance, and this geopolitical strategy likely extends to countering rival nations like China. of course, we're starting to see rumors around the world, whether it's Russia, China, smaller countries, essentially start to pivot to Bitcoin, or at the very least take Bitcoin seriously and no longer just ignoring it and digging their head into sand. Now, wrapping up here, the government is likely accumulating significant holdings without immediate market disruption, positioning itself for a transformative reveal that cements Bitcoin's role in the national financial strategy. Now, the TLDR of this article is this idea that, as I've been saying on the show, you guys heard me coin it a few times on the show as the billionaire FUD playbook, that you essentially, you FUD Bitcoin, you acquire Bitcoin at a low price. So once your bags are packed, that's when you announce that you are actually buying Bitcoin and you have a sizable position. Well, again, we might be tea leaf reading. We might be reading between the lines. We might be speculating a little bit on today's show. But it is starting to sound like the U.S. government is saying essentially that last part. They are packing their bags, and when they're ready to announce that they have fully accumulated their position, that's when they come out and announce that they have bought a lot of Bitcoin, that they are acquiring Bitcoin. They may continue to acquire Bitcoin, because that's when you will see the wave of FOMO come into Bitcoin. The game theories start to play out. Every nation state will now have a panic rush to get into Bitcoin. And I think that's when we will get, I forget what they're called, Omega candles, God candles, the 100K candle everyone's waiting for. Now, Bo Hines followed this up on Twitter, and he was actually referencing Eleanor Terra, and he's talking about the Strategic Bitcoin Reserve. And you can see here, as stated today, we are committed to getting market structure done by the end of September. Period. So now we have a deadline. We have a timeline. By September, we might get some news coming out whether the U.S. is acquiring Bitcoin, whether they bought more Bitcoin, what this market structure is going to look like. And going further, we got this other story coming out of the Wall Street Journal, which is doubling down and continuing this trend. Again, highlighted by TFTC, many countries are studying ways to inject cryptocurrency into their financial systems. So you're seeing that these things are taking off. These conversations are going crazy. Now, I do want to add one more wrinkle in here. I know I've been ranting a little bit, but I'm on fire this morning. I'm geeked up on coffee. I saw this article on Politico this morning, and we've been talking about Bitcoin corporate treasury strategy on the show for a while, but now it looks like political aisles are picking this up. It looks like politicians and politics are picking this up, and they are starting to kind of pick their lanes here. So here's the title on Politico, and it goes, "Forest Fire. Corporate America's Bitcoin buying spree fuels concerns. Critics warn that hoovering up digital assets could backfire whenever the volatile crypto markets take a turn for the worse." Again, you can find this on Politico, but I've just highlighted one portion here. Washington is beginning to take notice. Again, Washington is beginning to take notice, whether that means acquiring Bitcoin or the opposition side saying, hey, we probably shouldn't do this. But Senator Jeff Merkley, an Oregon Democrat who has criticized Trump's enthusiasm for the upstart industry, raised concern about companies, quote, investing in crypto despite its financial risk and potential for corruption. And a former Wall Street regulator who was granted anonymity to speak candidly said the rise of corporate or crypto treasuries could be, quote, the instigator of the next crypto crash. And Senator Elizabeth Warren, the top Democrat on the Senate Banking Committee, warned that the fallout from any future crypto crisis could reach beyond digital assets. Quote, "When crypto crashed in 2022, the shock stayed mostly inside the crypto bubble, so our broader economy kept humming. If businesses start piling crypto onto their balance sheets, the next bust won't be so contained, and it could trigger layoffs and business failures in multiple sectors." Again, we're hearing from Elizabeth Warren, hey, if Bitcoin has another bear market, this is a systemic risk to the whole financial system. It's your guys' fault for stacking sats, when in reality, it's the fiat system's fault that it can blow up so easily. But there was one quote in this article this morning that I want to connect to the clip of Bo Hines in our Substack. And you guys have probably heard this, but now in this new light, let's read what Eric Trump's been saying. And he goes, "Everybody wants it on as a balance sheet item," said Eric Trump, the president's second son, who's become a leading voice for the family business, said at the Bitcoin conference. And he goes, "Everybody wants it. No one wants to get rid of it. And it's incredibly powerful. I think you're going to see the value skyrocket." So I am tea leaf reading here, guys. I'll admit to that. But when I heard Bo Hines say what we've had these conversations about, is the U.S. buying? I think it's coming very clearly to me that the U.S. government is positioning themselves, rather, of course, as we've seen with the ETF, with all the insiders into the Trump administration that are Bitcoiners, you're starting to see that probably by December, we should have a timeline on if they have acquired more Bitcoin via what ways they've acquired Bitcoin. And it looks like we might have a slow summertime. But I'm starting to feel that by the end of this year, we are going to get the fireworks. It looks like the U.S. is going to announce it by September. Some very interesting news. We might get some buys come out here. But I don't know, guys. Tell me in the chat, am I tea leaf reading? Am I reading too far in between the lines? It sounded like Bo Hines said exactly what we said on our Substack, that even if they are buying, they don't necessarily have to tell us that they are buying. Now, I know we've been wondering what's up with the audit. You know, hey, U.S. government, hey, Uncle Sam, do you actually hold those 200K coins? What is going on? I'm starting to lean towards the idea that the U.S. government probably has more Bitcoin, and this might be some kind of art of the deal thing going on. You know, you don't announce your buys because we already know what China's doing. They've been kind of slowly but surely pivoting into Bitcoin. So things are starting to heat up. It's starting to get interesting here. Anyways, I've gone long enough. I should have broken this up a little bit. But Luke, what's your thoughts on this? Is the U.S. government stacking Bitcoin? Am I speculating too hard, or is this right up your alley?
Oh, this is right up my alley, my friend. I certainly do think any of these big Western nation states, I think they're all quietly buying Bitcoin. Again, let me retract that a little bit. I'm not so sure whether all of the, the French or the Spanish or a lot of the other, let's call them collectivist countries across the West who like to practice what they preach, and they're trying to create kumbaya, so to say. I don't think they're adopting Bitcoin. They're patiently awaiting the burnt lobsters, digital CBDC that's going to be rolling out in October. So I think a lot of these European countries are certainly going one way, but then these Western American countries are going the other way. What I find really interesting is that since America's kind of embraced Bitcoin, they've elected Donald Trump, they seem to be swinging back the other way in a pretty hard fashion. We're watching the Middle East kind of come back together. It looked as if the Middle East was going to go one way. Saudi Arabia joined the BRICS. We saw the Middle East accept one oil sales in 2022, 2023, 2024. But it looks as if since Trump's kind of embraced, let's just call it what it is, a lot more real principles-based reality, not just economic reality, it looks as if it kind of started coming back this way. We obviously broke you the news a couple of weeks of the Abu Dhabi $1 billion Bitcoin ETF, Saudi Arabia, and a lot of these are pivoting hard to Bitcoin. So again, it's really interesting. I think America, the Middle East, they all seem to be going the Bitcoin. And then, your and your Italys and your Frances, a lot of these countries who've kind of down the path of reality, and they're going down the different path. The clown.
Did we lose him? Did we lose me? No.
Nothing.
Okay, we're still here. All right, well, I think we lost Luke. So, Luke, if you can hear me, I'll DM him. We'll get him back on. All right, well, anyways, we do this live, guys. The show goes live, and we do it remotely, so things happen. But
we're trying to censor him,
Yeah, too much sauce over there. So, Kenobi, what's your thoughts on this? Do you think the U.S. is stacking? Am I speculating too much, reading between the lines? I think when you kind of frame it in this idea of course, they're not going to fully telegraph what they're doing with their buys because of the geopolitical game theory implications here. Now, I do see people in the chat essentially saying, as an American citizen, a taxpayer, they should tell us what they're doing with our money. But I don't think this would be a break from everything else they do. So I don't know.
I mean, it's kind of like their modus operandi for the past few decades, even a century, right? I think there's two data points that are very interesting, right? First of all, Jason P. Lowry, he went quiet like a long time ago. right? And we haven't really heard anything back from him. So what has he been up to, right? I don't really agree with his soft war thesis on all of that, but hey, I'm not in the U.S. military. I'm not in the U.S. government, right? So perhaps he was able to sell it properly to those people, and hey, he got into some crazy rooms to tell them how it works, right? So that's the first thing. He disappeared a while back, although we have seen some, indications that he's still alive. And then the second point is, it's been eerily quiet over the past 3 to 4 to 5 months since the executive order was signed. It's been way too quiet. You know, when it's like definitely quiet, like it's suspicious. It's very suspicious. And also the way that the market has been moving, just chopping sideways, not really doing anything, going anywhere. I think that's the telltale. I think that's when you know that they're accumulating. They want to accumulate at a certain spot. They want to accumulate at 100K or what, between 100K and 110K, perhaps drop it down to 80K like a month ago, right? But nothing really has been happening. It's been very boring. Meanwhile, we have all of us just speculating. What is going on? What are they doing? I mean, well, they're just buying up, gobbling them up, as well as MicroStrategy, Meta Planet, right? Everyone's buying Bitcoin. Everyone's doing it. And still the price can't go over 110K. I think that's the telltale sign that they have definitely been buying. And honestly, I feel like by the time they come out of the woodworks and they show the magic, it'll be a sizable stack, a very sizable stack. And I agree also with Luke. Nice to see you again, by the way. They were trying to censor you, you know. Today is the day where they censor all of us. Be careful,
Too
guys.
much sauce.
Yeah. But yeah, I definitely think that the US is buying, that's for sure. Other big countries are buying. I've also heard that a few other sovereigns that are not, hey, we have BTC sessions on the chat. Hopefully we survive around here. Luke has already been censored. Love you too, BTC sessions. But yeah, so I've heard that other sovereigns in Europe have started buying. I don't know any names. Even if I did, I wouldn't be able to share them, right? But I'm Spanish and German, and I'm 100% sure that Germany, with their, let's say, brain galaxy moves that they've been doing for the past 3 decades, turning off nuclears, turning on the coal plants, importing nuclear energy from France, and then going full crazy on the green stuff. And then also, like, well, what happened in 2020, let's not go into that, right? But it was crazy as well. And then also selling how many thousands of Bitcoin?
50,000.
Oh, don't remind me. Jesus Christ. And now you're telling me that these guys are going to buy? No, these guys are going to be last in the queue. They're going to get 1,000 Satoshis tops, and that's it. And Spain as well. I mean, I'm Spanish. I'm here in Barcelona. Not looking good. Not looking good. Our politicians are way too worried with other stuff. So French people, you know, they're chilling with their baguettes and their coffees and, you know, whatever they're doing over there. I don't think Europe has woken up. We're still, let's say, collectively asleep, as collectivists that we are.
Yeah, and in the news, guys, we do have some interesting news coming out of the EU. So, you know, full circle here. But there was something you said, Kenobi, that I don't know if it really kind of sunk in when I was thinking about the strategic Bitcoin reserve. But you basically said right now, and just to kind of recap what you said, you're like, when these governments come into Bitcoin, they're not going to buy a measly, 100 coins or something like that. You know, they're going to be buying a huge stack, a sizable stack, a good percentage of what they're holding right now, even like 10% of what they allegedly hold, which is 200K. That's 20,000 coins. Like, when the governments stick their toes into this market, especially the big governments, the US, the big three, China, Russia, etc. Like, when they come into this market, the splash they make is a huge splash. They'll do some big sailor 20,000 coin buys type stuff. So if they are working in the background, or rather, as Kenobi, what you were saying, maybe they're doing the Bitcoin developer ethos, just build in silence. Maybe they're building the strategic Bitcoin reserve in silence here until it's officially announced. But again, you have to remember, they have trillions of dollars, or rather have trillions of dollars. They can print trillions of dollars, so they can obviously acquire a huge stack of Bitcoin. Now, there is the caveat of budget neutral here. That's probably the one limitation thing, but there is another kind of interesting trend that I've been kind of following along the last couple of weeks. It's this idea that we are seeing kind of a partisan split in regards to Bitcoin. As you can tell, obviously, the Trump administration is going really into Bitcoin. You're seeing some very favorable regulations. You're seeing the SEC flip around Bitcoin. And then you're seeing the opposition essentially laying the groundwork to fight Bitcoin and Bitcoiners. And I've been saying this for a long time, that we're going to get to a point where all of us Bitcoiners are villainized by, half of the aisle here. And it's super important for us to at times remember, like, Bitcoin is for anyone. Bitcoin is for enemies here. Like, if you want to fight Bitcoin, you're really only hurting yourself and the people that listen to you. But I'm starting to see the bricks being laid towards that future, and it might come a lot faster than we think. So even though a lot of this stuff is bullish and we might see the U.S. kind of Trump come out and claim some bombastic buys in Bitcoin, we also have to stay vigilant that at that time we might see a vicious whiplash of the media attack us and call us villains. We might even see the green FUD come back around. We're boiling the oceans. We're going to take all of the energy of, I forget what it was, like Norway or whatever. All the crazy stuff we lived through in the past. So I find that very interesting that we're starting to see this come out from, of course, like Politico.com, like I just mentioned right now. Elizabeth Warren's been very notorious for doing this. So as bullish as I think this is going to be, and actually, we'll step back for a second. I'm not the biggest fan of governments acquiring Bitcoin, but I can't stop them from doing that. So before everyone in the chat calls me a status here, it is what it is, man. It's permissionless money. If they want to acquire it, they can acquire it. They don't need me to tell them it's okay or anything, okay? But I found that interesting as well. You're starting to see the media apparatus get turned on and kind of plant those seeds to make us all into villains. And I think as the price starts going higher, we're going to see that increase as well. I think it's going to be a whole new, actually two waves. One wave of a whole new retail wave. Like I was telling Nico yesterday before I got on the plane to go up to Canada, I'm like, dude, whenever this bull run comes back, like, this is going to be bigger than 2017. And for once, guys, I got the perma bear to be like, yeah, I really think it's going to be bigger than 2017. But again, on the flip side, you're seeing that once this price starts going up, the narratives around Bitcoin, around inequality, about the rich staying richer, those are going to get kicked into overdrive. And so, prepare yourself to that. Anyways, Luke, without getting us banned here, what's your thoughts on my last tinfoil hat thought?
Yeah, I mean, geez, I have to be careful my thoughts if I'm not going to get the channel banned. I do have a tinfoil hat around here somewhere, but I do just think that, every nation state will be forced to adopt Bitcoin. Again, and I don't think retail was ever going to take us to $1 million a coin or $2 million a coin. Like, if the billionaires and the nation states never showed up, then I'd probably agree with those losers saying, hey, look, we're going to follow a power law and diminish in returns forever, and Bitcoin's just going to become this boring, predictable thing. I would actually agree with the experts, so to say, in the Bitcoin space, who draw the funny lines on charts. But I do think the reason why I'm personally as bullish as I am is because nation states with money printers and sovereign wealth funds that can tap into a $50 trillion capital market, they are now the new buyers in the Bitcoin space. So again, to address the conspiracy theory, I just think it's reality that every nation state will be forced to buy Bitcoin. I think we're just now starting to see this wave and this really big ramp up of public companies beginning to adopt Bitcoin in a really big way. I saw a chart, maybe we can bring it up later, but in like 2020, there was like one public company adopting Bitcoin. 2021, there might have been like 20 or 30. That number stagnated in 2021, 2022, 2023. Now we got like 130 public companies adopting Bitcoin, and it's growing at like 30 public companies a month. So last month, there's nearly a new treasury company with Bitcoin on the balance sheet being, started every single day. So I think this, public FOMO that we can see in the realm of these huge, big public corporations, I think this is representing what's actually happening underneath the surface. And I think the demand that we're seeing skyrocket on the chart that Opti just pulled up out of the wazoo while I was midway through a rant, I think this is representative of what the nation states are probably doing. But again, they don't have to file these SEC disclosures every quarter, publicly announcing, hey, we got Bitcoin. Nation states can just quietly print and mine Bitcoin all they like. So I think that chart there, it's a really good one. And I do think it kind of represents what nation states are doing. So again, we're just two conspiratorial gentlemen on YouTube up there, but I do, if I had to speculate, that's what I think is happening underneath.
Yeah, though there is a constraint, of course, the self-constraint, or rather self-constraint of budget neutral, which I think is kind of this idea that they know there will be political pushback on this if they are, quote unquote, using taxpayers' dollars to acquire Bitcoin. So, as critical as I am of politics in general, it seems like they are thinking very deeply about how to very seriously announce this and obviously make a splash when they do this. So, who knows? I think we just need to be a little patient here. In the meantime, we get to stack sats, right, Kenobi? The sats are cheap right now, so we can just keep stacking. Everything's good.
Well, the funny thing is, if you look back 4 years, 3 years, 2 years, it's not that cheap, right? You think, and it hurts, right? I still remember we were doing meetups here in Barcelona around 2022, the bare bottom, and we're buying a beer for like 10,000 sats, 12,000. They go for like €2.5, so like 10,000 sats. And now in the recent meetup, I looked at the invoice, and it was something like 2,300 sats, and I was like, all right, I guess that's deflation. That's the Bitcoin life, is the beers have gotten 75% cheaper. So I mean, that's how you also have to look at it looking forward, right? Because now the same way that the beer has gotten cheaper, your buys have also become less, let's say, impactful. But you also got to remember, in like 4 years, 8 years, where's Bitcoin going to be? At least $2 million, at least $3 million. I mean, also we got to remember inflation, all of that. Like, it's almost like saying, I have
no, 2 million in today's purchasing power. That's how
that's
you
what I was
say
going to say, right? Because otherwise, in Venezuela, it's like, yeah, I have $40 million. I can barely buy coffee, But no, we're going to have like easily $1 million with today's purchasing power. So anyone who has like half a Bitcoin or even 0.1 Bitcoin, hey, you suddenly have 100K. That's a down payment for a house, which, by the way, you should not put down. Like, just don't. If you want to do something, like perhaps get a little bit of a loan and start playing with that, see if you can leverage yourself a little bit, but don't buy a house. It's not a good business. Just keep renting. I know at the beginning of the live stream, some people in the chat, they were saying on YouTube, like, renting versus owning, the equity on owning and all of that. Is like, guys, renting nowadays is the trick. You don't put any capital up front. You keep everything, all of the capital for yourself. You just pay a little bit every month. You keep stacking like a motherfucker, like keep going. And in 20 years, you retire your entire bloodline, Nobody else has to work in your bloodline. So that's what I'm seeing right now.
Yeah, well, Kenobi, the chat is just still kind of reeling after yesterday's show. Nico came on and said the same thing, but we literally did like a 45-minute segment on it yesterday. So they're still chatting about that. But I agree with you. To me, that makes perfect sense,
Right?
So I know Luke doesn't even rent. Luke just, he just rents out Airbnbs. He's just living that nomadic life. So I know Luke agrees here.
Hell yeah.
Yeah, renting is the biggest shitcoin. That's a great point, Kenobi. I'm not going to buy a house for a long time. The shtick that I've had for at least the past 5 or 6 years now is that if a house costs more than 5% of your net worth, then it is a shitcoin. I can understand the argument that people make, like, but I need to justify my rationalization for loving a real estate and, succumbing to the property propaganda. People will say, the biggest narratives I hear is, but Luke, you don't have a family. You're a 28-year-old with a wild haircut. Of course, you don't care about security and owning a home. And that is true. Now, let me walk through the caveats. If you are someone who has a family, you might have 4 kids and all of the, you've got dogs in the backyard barking, you've got chickens off to the side laying eggs. I get all of the arguments. I need a house. I need a farm for my entire big family and zoo of animals I got in my backyard. I still strongly believe that when you run the numbers, if you have more than 5% of your net worth locked up in real estate, whether that is, paying the hundreds of thousands of dollars of a down payment for a home that you have to lock up to get the mortgage, I think you're going to significantly regret that decision in 10 or 20 years, even considering the wildest of circumstances. You might have 4, 5, 6 kids, and you might have to stress out about getting a new rental lease every 6 months. I get it all. I've thought very deeply about all of the considerations, and I still have a pretty strong opinion on that blanket rule. If more than 5% of your net worth is locked up in real estate, you're going to significantly regret that decision in 10 or 15 years. And I think most of this just simply comes down to the fact that most people are bearish on Bitcoin. Most people think Bitcoin's just digital gold. It's just going to be worth 500,000 or $1 million a coin in 5 or 10 years time. And I think when you actually think about what Bitcoin really is, and you stop just looking at lines on a chart drawn by someone who parades himself around as an expert and says, I know the price of Bitcoin, it's the gospel, it's going to be $1 million in 2033. When you actually start thinking about what Bitcoin could actually be worth, that is when you start to get a little bit scared if you've got more than 5% of your net worth plowed into real estate. Now, again, the caveat, 5%, I think that's because you can make a good argument for losing the hundreds of thousands or even the millions of dollars of value that you are going to lose by having 5% of your net worth in real estate versus being 100% all in Bitcoin. Sure, you can make an argument or a trade-off and say, I prefer to have the security for those 5 years, which is why I paid hundreds of thousands of dollars, or I lost hundreds of thousands of dollars worth of opportunity costs by having 5% of my net worth in real estate. But the big problem that I see is let me retract that. The big problem I see is that a lot of Bitcoiners have 10, 20, 30, 40% of their net worth tied up in sinking ships and anchors. That's what a real estate is. A real estate investment is an anchor. It's not only a psychological anchor, but it's an economic anchor. So again, I could talk about real estate for 20 minutes, but I'll shut up.
Dude, I swear every time this topic gets brought up, the chat gets triggered. And I think Luke said it best. And we tried to explain it yesterday. Like, everyone's situation is different. You can make pros and cons for both sides of this argument. But when it comes to like a, all in smash buy a house with 100 Bitcoin today, or maybe wait a couple of years, I think that argument's super simple. You're like, yeah, I'm not spending that much, or 10 Bitcoin on a house, whatever, whatever the argument. Like when you think in Bitcoin terms, you're like, yeah, why would I do that? Like, I just rent in 4 or 5 years, I can buy it for cheaper. So without rehashing the whole argument from yesterday, because the chat gets livid right now, let's get into the rest of the show. Guys, I do want to remind you, of course, to smash the like button. Comment on the show if you think that the U.S. is buying Bitcoin, or maybe if you just think I'm stupid. That's fine by me. And of course, hit the subscriber button, guys. We drop content Monday through Friday, live show, and we are dropping all kinds of content throughout the week. Anyways, I do want to give a shout out to our sponsor, or rather our partner. What a dirty word here. Bitcoin Well. Go to bitcoinwell.com/simplybtc. Scan the QR code and you can get 3 chances to win up to 1 million sats. I repeat, 1 million sats. That's like what, $1,000 right now for free. And of course, the reason we love them is they are self-custody by default, which means you literally need a Bitcoin wallet to buy Bitcoin from them, which also means they will never be able to rug pull you because they never hold the Bitcoin, and that's why we love them. You send the fiat, they send you the Bitcoin directly into your cold storage. This is the way. All right, guys, on that note, let's get into the rest of the show.
I want to tell you guys about our sponsor, Stamp Seed. Is your Bitcoin in cold storage really secure? Are your seed words really secure? Stamp Seed's do-it-yourself kit has everything you'll need to hammer your seed words into commercial-grade titanium plates instead of writing them down on paper. Don't do that. Paper sucks. You want to literally stamp your seed into this plate of titanium. Your words are actually stamped into the metal plate with this hammer. So once your words are in, they aren't going anywhere. No risk of the plate breaking apart and your pieces falling everywhere. Titanium stamp seeds will survive nearly triple the heat produced by a house fire. They are also crush-proof, waterproof, non-corrosive, and most importantly, because this is generational wealth, time-proof. All things that paper is not. allowing you to hodl your Bitcoin for the long haul. I mean, here is the plate that they crushed. They put in water, they put a blowtorch to it, and as you can see, the words have survived. Stamp your seed on StampSeed. And you can use promo code SIMPLY to get 15% off anything on their store. Head over to stampseed.com today.
All right, guys. The chat's still triggered over whether you should rent or buy. That's apparently a hot topic here. Everyone loves that topic. All right, we're over here on Clark Moody's dashboard. Of course, the current Bitcoin price is $107,300. Seems like we're responding very well to the crisis in the Middle East. I think things are going good, man. I think once we break close to all-time high again, it's off to the races, boys and girls. And then I'm not going to read all the numbers here because you probably don't really care, but block height, probably the most important number to me, is at 902,963. TikTok, next block, and market cap in fiat terms, $2.13 trillion. And the decline from all-time high, a negative 420. Let's go. So, not going to read all the numbers here. All right. Anyways, I do want to kind of give a little context here. So, as I was kind of talking about in the beginning of the show, or rather, I've been kind of talking about it yesterday, I kind of mentioned it, is this idea that we are starting to see Bitcoin enter the mainstream, whether it's from content creators on the fringe, whether it's more mainstream creators that are, streaming, IRL streaming. Everyone is seemingly talking about Bitcoin in certain ways, but we are starting to see a new wave of FOMO. And also, we're starting to see the new marketing team out there. The BlackRocks of the world, the institutions of the world. They're in suits. They talk well. They have fancy charts and numbers. They are all starting to instigate this FOMO. Well, we saw this clip from Squawk Box. It is a billionaire. And let's just hear what he's saying about Bitcoin. And I think this is a trend of what we will see towards the end of the year.
I just thought some of the big companies are going to be amazingly positioned. Microsoft is going to stay on it, and maybe today it's a $3 billion company, but let's say it doubles in 5 years, it could be 5 or 6 billion.
Oh, trillion.
Trillion, yeah, sorry, of course, trillion. Then we added Bitcoin. We thought of Bitcoin as a company. Today, I think Bitcoin is 2 trillion. We're like, well, could it get to also 4 or 5 trillion? Obviously, Bitcoin's not a company. It'd be like saying if gold's a company, but I thought it was interesting as a new asset.
Yeah. Right. Market cap. Yeah.
Market cap, 2 trillion is so big.
When did you get involved in Bitcoin?
I've not gotten involved with Bitcoin, and I wake up every day at 3 in the morning, and I'm like, why am I such an idiot? What have I been waiting for, not being involved in it? And it just goes up and up. In the past, I think this is interesting, the retail investors, they were much faster at getting involved with Bitcoin than the institutional ones. And I always thought Bitcoin's amazing, but it's double or triple the volatility of the NASDAQ. NASDAQ's already pretty volatile. Why do I need to deal with this added volatility? Recently, Bitcoin, when it went down during the tariff, only went down as much as NASDAQ. So it seems the volatility as an asset class is coming down, which I thought was pretty interesting.
Okay, so but given your sort of thesis, do you say to yourself, even at this point in the ball game, if you think it's going to double or triple and going to be part of the NASDAQ 100, if you were to think of it as a company?
Yes, I have to think about it.
That you should own it now?
Yes, I have to think about it now. Do I own it now? Do I own it tomorrow or in a few days? But every day, I do think, why do I not own it? And I think to be a good investor, it's not just like owning the obvious stock, but sometimes you have to change your mind and you have to just say, well, I made a mistake and I'm changing my mind, and maybe Bitcoin will be that.
How do you come up to that valuation? Is it as a percentage of gold's market cap or something?
So I thought like the market cap of the world, the net worth of the world is, I think, 450 to 500. True. Equities are, let's say, 120. Gold above and under the ground is 20.
20 trillion.
And then Bitcoin is 2 trillion. And I was like, okay, well, 2 trillion, let's say it represents 0.5% of the net worth of the world. Could it go to 1 or 2? Some people say, oh, Bitcoin's going to be 100 trillion. I'm like, okay, that's not, maybe a bit of an aggressive estimate, but could it double over a period of time? And then we talked about the de-dollarization of the world, the end of U.S. exceptionalism. So those would be some of the reasons.
Okay, so some things to break down, and I was just about to tell this for you guys. So Skywalker asks, who's this guy speaking? It is Philip Lafont. I'm going to butcher the name of his company. I think it's Cotu Management. Sorry, guys. It's a hedge fund and venture capital firm, and he's, again, billionaire investor who's invested in some of the biggest companies that you probably know, like ByteDance, DoorDash, Instacart, Snap Inc., Spotify, and UEI Pass. So, like, this guy, you know, as he was saying in that clip, like, he is an investor in startups. Like, he takes the risk to invest in what he thinks is going to be the future. And there is a few things that I find the most interesting. One, of course, you can hear the regret. He's like, I stay up at 3 a.m. and I wonder and I kick myself in the ass. And I'm like, why didn't I buy this Bitcoin 10 years ago? He'd probably be, you know, one of the richest men in the world at this point. But you can tell that he's probably going into like the early Saylor moment right now. Remember, Saylor was a huge skeptic. Now he's like the prophet of Bitcoin right now. He's got the biggest, no one's probably going to catch up to Saylor's holdings here. But you're starting to see this trend play out. And I think this is not only playing out in public, on television, on corporate news, but it's also probably playing out in behind the scenes conversation and personal conversation. So if this is just a continuation of the trend we're seeing, I think, again, we might be seeing a huge splash come from not just the nation states, not just the corporate treasury strategies, not just the bond markets, but individual personal wealth investments. I think it's playing out really soon. It really starting to look like, how's this price not going up? But there's one last thing I want to say before I pass it over to you guys. The one thing that I thought was very interesting from that clip was this idea that we've been dealing with around Bitcoin for a long time, that Bitcoin is too volatile. As I said earlier, you know, in the face of all the things we've seen in the last couple of weeks, Bitcoin is holding up very, very strong. I think it spent like 40 days above 100K, even though it seemed like the world was melting around us. And as Philip was saying, you know, when we got the drops down, when all the global markets dropped, Bitcoin only dropped as much as the S&P 500. Like, it's no more volatile than traditional macro stocks at this point. So a lot of the FUD that has stopped a lot of huge deep pockets to come into Bitcoin, I think are slowly but surely starting to iron themselves out. And now the real question here is, yeah, we might be getting dampened on the downside, but are we going to be dampened on the upside? And I think that's everyone's question. You know, is there paper Bitcoin? Is there price manipulations going on? Like, what exactly is the mechanics playing out? Well, again, you know, keep it simple, stupid, aka keep it simple, Opti. It's demand supply economics. At a certain point, it will break, and that's when we will see Valhalla. So, you know, stay patient, stack some sats, stay humble, stay solvent. This is the key. Anyways, I will pass it to Kenobi. Kenobi, what's your thoughts here in this clip? Are you just relishing in the fact we're seeing billionaires have some regret and some FOMO around stacking Bitcoin now?
Well, it's never good to, like, you know, have Schadenfreude, you know, like where you like enjoy other people, like, you know, getting hurt or something like that. But at the same time, it's like, you guys have been like making fun of us. You guys have not really been taking us seriously, and now you're suddenly like, oh, whoa, what happened? Like, we gotta wake up, you know. So I think to a certain degree we shouldn't do this, but at the same time, it's like, I told you so, you know. On another note, the whole, like, you know, the whole classic of like there's 48 million millionaires or something like that, but there's only 21 million Bitcoins, or no, there's 48,000 million. I don't know, something like that. If each millionaire wanted to have one Bitcoin, they couldn't all have it. Well, for billionaires, it's well past time, you know, like they're not gonna get it. Like, they don't realize it yet, but they're not billionaires anymore. It's just a matter of time. Oh, well, depending on how inflation goes, because at some point we're going to have the big print, right? They're going to become trillionaires and quadrillionaires, like people in Venezuela, you know? They're also millionaires. They can't have a coffee or an apple, afford an apple, right? So that's on one side. And I think we're going to start seeing this more. We're going to start seeing this more, and they're going to be the last ones to get Bitcoin. They're still going to own assets. Because the way that these guys, they got rich is that they own assets, but they're going to see many people just basically rocket past them, you know? And that's actually something that David Zell told me in Oslo during the Oslo Freedom Forum. David Zell, the guy that runs BPI with Graham McCarthy, he was giving this factoid that by the time Bitcoin has the market cap of gold, which could be any day now. So like, wait for tomorrow, guys. No, but honestly, it could, by the end of the year, we could honestly be there. Like, it wouldn't be crazy. I would not be surprised. At that point, half of the world's billionaires will be Bitcoin and shitcoin adjacent, like crypto billionaires, people that have the like cypherpunk, liberty first, Austrian economics, at least close to them, because there's some, like who's the guy from Tron, who like bought the apple and not the apple, but the banana on it with Justin Sun. He's also going to be a billionaire, right? He's also going to be part of that number. But anyway, he's better than, I don't know, some of these billionaires that just don't care and they just want to enslave us, so to speak. So yeah, I think it's gonna be great to have so many billionaires so many, this like reshuffle of like wealth, where so many billionaires are gonna be Bitcoiners, or like, they're gonna have the fight in them. They know what it is. They've been there. They were called, criminals, terrorists, all of that back in 2013, 14, 15, and now they're billionaires, and they're in the same rooms as Trump, for example, right? As Macron, as whoever is running Germany nowadays, right? Or whoever's running the UK nowadays, right? They're going to be there, and they're going to be telling them what's up and what is not up, right? So that's going to be good, and I think that should have some great positive impacts, not just on price, but also on like ourselves, Bitcoiners. Because going back to what the point we were saying before, like, we are going to be blamed whenever the whole like bubble explodes. They're going to point at us. Like when the Titanic sinks, they're going to point at everyone who got in the life rafts called Bitcoin, and they're going to be like, it's your fault, as if we had created the fiat iceberg that sunk the Titanic. Like, they're going to blame us, and we're going to need as much help, as many people on our side, on the like political capital, with real capital, in positions of power, to say, actually, wait, hold up, don't prosecute these guys. They were actually calling all of us. They were in the, in Thanksgiving dinners. They were in summer parties, always talking about Bitcoin. They were your annoying friend. They were telling you, hey, get on the life raft. It's here. And it's like, this life raft is not just good. It's going to make you a shit ton of money. And nobody listened. And now that everyone's become Venezuela, everyone's just, the big print has arrived, and you are a billionaire, but you can barely afford an Apple. Now you want to blame them. When we were the first ones from like ages ago saying, hey guys, it's coming, it's here, right? So I think that's what's going to happen. And honestly, I'm happy that some of these billionaires are gonna eat their own words, basically. We shouldn't be too happy, as I said at the beginning, but at the end, it's like, it's right. It's just right.
Well, while you were talking, I was seeing the headline already flash in my mind from like the New York Times or something in a few years. Like, the Bitcoiners weren't loud enough. Why didn't they tell us to buy Bitcoin? Now we're all poor, or something like that. It's already going to happen. You heard it here first. And actually, while you were talking, I do want to make another joke, another Opti Dad joke. Since you guys aren't getting memes today, I'll throw a meme right here. As Kenobi was saying, all of you will be millionaires. Everyone will be a millionaire because of hyperinflation. Unless you own Bitcoin, you can also be a millionaire. You and you and you will all be millionaires. But no, Kenobi, that's actually I never actually heard that idea that you were recapping of Zell. At the market cap of Bitcoin or of gold, Bitcoin would be, so entrenched in the system that half of the billionaires would, be Bitcoin adjacent. And of course, again, that's basically $1 million Bitcoin. So it's not that far away, guys. Like, it's not this far-fetched idea. It could potentially happen at this, whatever this next parabolic bull run could be. So it's probably closer than you think. Anyways, Luke, what's your thoughts on that clip by Philip Lafont? What's your thoughts on billionaire FOMO starting to take place? Is this the mother of all supply shocks coming? Is the supply shock coming? Is this going to send us to, what was your ridiculous price prediction last time? Like $10 billion per coin or something redonkulous? What's your thoughts watching that clip?
So $4 billion
$4
is
billion.
just math. It's going to happen. It's going to happen. We laid out the maths in the last live stream, so I encourage the people to go check that puppy out. But yeah, I think firstly, the clip was hilarious. I thought that was really funny there with the the billionaire there regretting the fact that he couldn't buy Bitcoin, and it wakes him up at 3 a.m. in the morning. I thought that was absolutely hilarious. But I think, like we always talk about, the Bitcoin on the exchanges, that's the biggest indicator that, the billionaire FOMO has started. And I just think it's only going to accelerate. Again, over the past 6 months, we got 6 months of data showing 100,000 Bitcoin leaving the exchanges every single month. I think we're kind of at this hockey stick right now. And I do think, to Lightning Goat's comment, we are on the precipice of the mother of all supply shocks. I think it's coming. I think it's much closer than most people think. And like I continue to beat the drum about, it's all over by 2030. 2030, it's all over. I expect that's going to come a lot quicker than most people think. And again, the price of Bitcoin, it's not in the hundreds of thousands, and it's not in the millions when it is finally all over. When we see probably what's going to be the most extreme volatility we've ever seen in our life, price of Bitcoin is going to be 8 figures and 9 figures. It's not going to be hundreds of thousands of dollars a coin. And I just got my popcorn and I'm just sitting back and renting until that day finally comes that Bitcoin is valued where it should be valued.
This is why you're good at what you do, Luke. That was good. All right, guys. As I was saying earlier, we do have some crazy stuff coming out of the EU. They are saying the quiet part out loud. You probably won't believe it if I don't actually just read you the headline. So let's just get into the news segment.
I want to give a shout out to our partner, Ledin, the leader in Bitcoin-backed loans. Unlock the liquidity in your Bitcoin without having to sell your Bitcoin. They've issued $9 billion in loans to over 10,000 customers since 2018. I absolutely love these guys. Not only do I have an account with them, but I also have a loan. And what I love about them is that there are no monthly payments, and you could pay back the loan at any time. As soon as you send your Bitcoin as collateral, you'll have cash in your account within 24 hours. Over 1,000 five-star customer reviews, and they've never lost a single dollar or sat of customer money. Go to learn.ledin.io/simply today, and you'll get 0.25% off your first loan. I want to give a shout out to our partner, sat123.com. Sovereignty isn't just about your money. It's about your communications too. When the grid goes down, most people go dark. Cell towers fail in hurricanes, cyber attacks, and blackouts. But satellite phones, they don't rely on local infrastructure. Iridium has 77 satellites in orbit, giving you a direct line anywhere in the US, even offshore. If you hold your own Bitcoin keys, you should hold your own comms too. Sat123.com also has everything you need to start building your Bitcoin citadel. Starlink, battery backups, Faraday bags to protect your hardware wallets, and much, much more. It's a one-stop shop for anyone serious about resilience and off-grid independence. Stay connected, stay independent, stay sovereign. Go to sat123.com/simply today and use promo code SIMPLY to get 15% off anything on the store. I want to give a shout out to our partner, Cold Card. If you're serious about self-custody, Cold Card is the best Bitcoin hardware wallet. There is no second best. The Cold Card Q is the ultimate air-gapped Bitcoin signing device, complete with a full keyboard, large screen, camera, NFC support, and much more. Do you prefer something sleeker? The MK4 is trusted by hardcore Bitcoiners around the world. Both are built by Bitcoiners for Bitcoiners, secure and open source. Simply Bitcoin viewers get 5% off with promo code SIMPLY. Take self-custody of your Bitcoin today with Cold Card.
All right, guys, I'm going to jump straight into this because this is just batshit insane. So this came out this morning at 5:02 a.m. Eastern time, and it goes by the European Central Bank. On Twitter, it goes, there is an urgent need to channel retail savings into capital markets to develop those markets and finance EU priorities. An EU savings standard could increase retail participation, benefiting savers, boosting investment, and supporting strategic priorities. And I saw someone in here say, like, maybe I didn't see it. I don't know. It's like, what the hell does this even mean? Is basically what the tweet said. Anyways, let's break this down, guys. So here's from the ECB blog. And of course, you know, we talk about this constantly on the show. Why should everyone be forced to be investors if we just want to save our money? Now, keep that in mind when you kind of hear some of these points that they wrote in this blog, which they did caveat at the end that this is, you know, the opinions of just the authors and not the European Central Bank. But, you know, at this point, it's kind of like us here at Simply. Like Nico gets all the flack for stuff, but it's really all of us doing crazy stuff. Well, Chrissy Lagarde gets all the blame for all of this stuff. The head of the European Central Bank gets the blame for this, so they can try to skirt the responsibilities away. But let's just picture Christine Lagarde saying this stuff here. So the title is Crossing Two Hurdles in One Leap, How an EU Savings Product Could Boost Returns and Capital Markets. You heard that right. Your savings will boost the capital markets. There is now an urgent need to channel retail savings into European capital markets in order to develop those markets and finance EU priorities. In this edition of the ECB blog, we show that an EU savings standard could increase retail participation in the capital markets, benefiting savers, boosting investment in EU companies, and supporting strategic priorities. Honestly, it's almost like what's it, oxymoron? You know, like jumbo shrimp. It's like I'm just trying to save, yet I am now a participant in the capital markets. Like, make it make sense, European Central Bank. But of course, they're a fiat bank. Anyways, I'm not going to read the whole thing. I highlighted some points here. The trade-off between investment cost and investment objectives. A fundamental feature to factor into the design of a European savings initiative would be a low cost of investing. This would capture the most cost-effective products. On the one hand, this highlights a crucial trade-off between low-cost products, higher returns, and diversification for savers. On the other, it showcases an opportunity to align with European financing priorities from the consumer's perspective, ensuring that investments have a broad geographical scope, can enhance returns, and diversify risk. However, this approach may conflict with the goal of financing European priorities, especially when tax incentives are used to encourage investments in the EU. Now, going further, again, a bunch of mumbo jumbo. It sounds like they're trying to collectivize your savings here. You know, they're trying to take your savings and push it towards, quote, EU priorities. Sounds interesting. Now, I found this interesting considering we always talk about Bitcoin's CAGR. I do have those numbers here for you if you need a refresh here. But increased capital markets participation can benefit savers. You know, you got to just, you know, gamble your money, gamble your savings away, and you can increase capital markets, man. But here we go. Here's some numbers. The funds in our sample achieved an average annualized return of 6% over the past 10 years. An average 6% per year over the last 10 years. Man, really good savings, Chrissy. ECB, 6% a year. You know, 6% CAGR, basically. Kind of amazing. You're kind of killing it over there. Similar to the return on European stock indices such as the MSCI Europe. I think I'm going to take a pause here because I do have the, you know, the Bitcoin CAGRs over here. 5-year, 4-year, and 10-year CAGRs. So, you know, it's not as good as 6%. But, you know, the CAGR over the last 10 years is 83.8%. The CAGR over the last 5 years is 62.7%. And even the CAGR over the last 4 years is 32 point... Oh, wait, you didn't see it. Oh, yeah, you did. 32 point... What was it? 4% or something like that. So, man, dude, the ECB is doing really good with your savings. You know, you got to trust them. They're giving you better returns, man. You got to trust your savings to the ECB. And then, of course... Investing in capital markets is not without risk, of course. Kind of interesting. You know, I really want to save in something that doesn't actually increase my risk here. And yet you're telling me that I should increase my risk here so that we can get our savings into the capital markets to push EU priorities forward. Remember yesterday when I was telling you that the EU is cooked and everything they're doing is because they're seemingly probably going bankrupt? I don't know. This might be some more signal of that. Again, your savings initiative could boost the EU capital market integration. Man, at least you're doing a good thing here. You know, you're boosting the EU's priorities with your savings, man. Sounds great. You know, the collective good and all that. Anyways, conclusion. Calibrating, or here, actually, I'll read the whole thing. Why not? European saving standards could benefit both savers and companies by channeling a share of existing liquidity to the more productive part of the economy. Again, your savings isn't productive, bro. It's not productive for you to hoard all that cash. You know, it's not productive for you to hoard all that money for your retirement. You need to funnel that into the capital markets. Okay. Sorry. I'm getting triggered here. Existing liquidity, the more productive part of the economy, while also providing savers with competitive returns. 6%. But its design matters. Calibrating the selection criteria, coupled with tax incentives and dismantling barriers to a more integrated EU capital market, will be key to achieving the dual goals of maximizing your returns and supporting European Union objectives. Crucially, investors should continue to enjoy flexibility when choosing which products to invest in, as they will ultimately be the ones who shoulder the risk of investing in the capital. You heard it there one more time. Give us your savings. We're going to give you something that doesn't require risks, but capital markets are risky. So, you know, invest at your at your own risk here. And we're going to boost European Union priorities, which a lot aren't doing a good job anyways. And as Marty Bent said right here, they're doing a covert bail-in in Europe to prop up their flailing economy. Again, we said this yesterday, and, you know, here we got Dan. He goes, and don't forget that Lagarde was head of the IMF in 2013 when they published this little note telegraphing their playbook to suddenly seize fiat in people's bank accounts in order to pay off government debt. Bitcoin fixes this. I mean, guys, like, at this point, at this point, Kenobi, what are you doing over there?
Look, I mean, you were getting triggered, and you're American. I'm, let's say, double European because I'm half Spanish, half German. You know, my mom's Spanish, my dad's German. And trigger doesn't even, like, get close to it. Like, we are currently Europe committing a mass suicide, basically. But, like, you know, the Pied Piper, you know, like with the flute and everything and taking all the rats. Well, that's what's happening. Like, that's literally what's happening. And they're literally telling us. Like the flute, it's saying, you know, hey, we're going to kill you all.
Metaphorically.
It's so funny. People are eating it up. People are eating it up. It's crazy, man. It's crazy. And the craziest part is that this all comes, like, because if you trace it all back, the European Union only works because Germany was financing everything. Like, Germans, they're one of the greatest nations, like the amount of stuff they produce. You know, they are one of the few nations that have, like, a positive account surplus. Like, they export more than what they import, and that means that they are on net saving. So they're savers on net. So that's why also Germany is the number 1, 2, second country to have when ranked by nodes. Right, there's like 3,000 nodes in ClearNet in Germany. Right after the US, I think. Like, that's why the community is so strong there, because Germany, by de facto, by the culture, they're savers. They produce a lot, and then, you know, they export more than what they consume. Right? They're great Bitcoiners. But what happened? Their politicians, they wanted to be more green, and they saw nuclear, and they saw, I don't know, some propaganda that, oh, nuclear is bad. Bitcoin mining didn't exist back then, but it existed on a good capacity since 2019. You know, on an industrial scale, so they could have stopped, you know, hit the brakes, but they didn't. So they just kept going full ahead, destroying all of their nuclear facilities, like decommissioning them all, and then just basically shooting energy prices through the roof at the same time that they have energy shortages. So not only do they not have enough energy, but also the energy is super expensive. So with that, you get that all of this industrial capacity, Germany, the beating heart and lungs and brain, if you want, of the European Union, suddenly was getting choked by themselves. They were choking themselves. They for 20 years, they decided, what if we just keep pressing? Like, what if we just don't breathe? What would happen? Well, we're discovering it now, because Spain, Italy, Portugal, Greece, and a few other countries, like all of the, right, we're known as the pigs, right? We are not contributing on net. Like, we take more than we get. So we're a drag on the European Union. And if Germany suddenly, I think it was this past year, they also became a drag on the European Union, it's like, wait a second, who's running this thing then? Who's financing all of this then? And, well, we're realizing that if Germany's not financing it, then we all have to. And I'm going to be honest with you guys, I don't want to. Like, I don't want to finance this bullshit project with a central bank in Frankfurt that is accountable to absolutely no one. Not that the rest of central banks are accountable to anyone, but anyway. And furthermore, this is not the first time that they were telling us. And I think this is actually, they were doing the whole like art of the deal. They took a page out of Trump's playbook, and they decided to, you know, Trump, what he does is he goes crazy first. He does a crazy move. Nobody expects it. And it's like, whoa, whoa, whoa. And then he settles in the middle. So, but he still got much more than what the other side would have been willing to give. So in this case, a few months ago, they were telling us, hey, we're going to move, I don't know, the number was obscene, like $10 trillion or something like that of savings, of like money in your bank account. We're going to move it to finance the war in Ukraine. These guys, they're supposedly, you know, left-wing, progressive, you know, oh, peace, kumbaya, you know, John Lennon, Imagine, all of that. And now they're talking about financing a war. Like, anyway, I don't want to get into that. That's a whole
that's going to get us nuked. But Kenobi, I do have a question for you. Obviously, as you said, you know, you're getting triggered and you're an American. That, you know, talking about me. I mean, I can venture to guess that if I talk to a normal person in America, they probably wouldn't understand what the hell we're even talking about. Obviously, in Bitcoin circles, it's like very, very obvious what this means. So I pose that question to you. If you talk to normal people, if you still talk to normal people here, you know, if you don't just speak to Bitcoiners, do they understand what's going on? Do they think this is a good thing? Like, what's the general consensus of the population over there? Wow.
Not good. We can summarize it like that. I mean, the problem with Europe and the EU is that it's worked good enough for the past, Europe for the past 80 years since the Second World War, you know, reconstruction, everything's great. Institutions, you know, Spain got out of dictatorship. Now we're a democracy. Well, apparently we're not really. But anyway, you know, and there's peace and there's no wars and it's so great, and our institutions are politicians, everything works, you know, the welfare system, it works, right? And that means that basically the previous generation, the one before 2000s, right? Because I was born in 1999, so anyone like 10 to 15 years born before that, they're asleep. They were born to a generation, to their parents, my grandparents. They had only enjoyed Europe, good times. Then they were born into like, okay, decent times. Yes. Okay. By the time that we're getting into the market, 2008 financial crisis wasn't great, but still, you know, hey, we can still at least live at our parents' house. And hey, we're not Venezuela, you know, like at least it's working. And they've been like put to sleep. They're basically to sleep. There's just an entire section of the population between the ages of like 30 or like 34 to like just everything up there. Like, they're asleep. They trust blindly. They literally, you know, the don't trust, verify. They're just trust and trust and trust and trust and never verify. That's their motto, right? Like, don't even try to think for yourself. Don't think for yourself. That's crazy. Wait, you're having thoughts? No. We cannot have that here. Wait, you read a book about something that isn't mainstream? Whoa, we cannot have that here. What? And that's the general vibe. So, in a way, we're getting what we deserve, because most of the population is asleep on the wheel. Like, here's another news. Yesterday, the IRS, the Spanish IRS, announced that they're going to start literally propagandizing. Well, they call it education, but come on, we all know what that's about, you know? They're going to start propagandizing 88,000 students in Spain about the benefits of paying taxes. Because look, there's no streets in Spain. There's no hospitals in Spain. We have to pay taxes in order for them to exist, for someone to put them there, right? It's just propaganda. They just want to keep propagandizing, and because the problem is with my generation, we're not going to have like a pension. We're not going to see that. We're most likely going to get like €2 worth, like in 2 days, right? We're going to get a coffee, and they're going to be like, hey, at least say thank you, right? And we're like, what are you talking about? Like, I've paid like in total, like what, $500,000 or euros my entire life, and I just get a coffee a month. That's what we're gonna get, right? And we know that. My generation knows that. Like, most people in my age, we're kind of like jaded. When I discovered Bitcoin, you know, Bitcoin is hope, literally. But for most of my generation, they still don't get it. But the problem is that they are asleep. They're still asleep because there's all of this like built up propaganda of like, don't think, no need to. The government has got it more or less right. They'll figure it out, right? And people are just they know I shouldn't trust politicians and all of that, but they still don't do anything. Like even the few ones that wake up in my generation, they're still kind of like, they no hope. And you try to tell them about Bitcoin, they're like, it's too volatile. I'm too late. And it's like, you know what? It is what it is. I guess, it's like with little kid, like you tell them, hey, it's hot. The fire's hot. Yes, it's great. And it's mesmerizing. We like men, we will literally build fires just to stare at it and sit at it, right? That's what we do. But hey, don't touch it. And the kid, and then it goes and touches it. And then it learns that it's hot. And I feel like we're going to see that, but on a massive scale. And it's going to burn. So actually, going back for a second, I know it's going to get everyone on the chat triggered, but like if you're in Europe and you have a house, people are owning, that's a liability. Yes, it looks like an asset. Oh, I have equity, all of that. It's a liability. You do not know when it's going to go down the hill, when you're going to get expropriated, when shit is going to hit the fan. And it could hit in 1,000 different ways, right? If you're renting, at least it's not your capital. You have everything on Bitcoin. You don't have that opportunity cost of like a house. You can just get your bags, next flight, or just boat or car out, right? But if you have a house, it's like, I got to sell it. Oh, what do I do, right? That's why Bitcoin in the fourth turning, right? Bitcoin in the fourth turning is going to like separate the people that make it and the people that don't make it, right? And I think Europe is not going to make it. As a whole, not at all. We're not going to make it. So individually, some of us, we're going to make it. The Bitcoiners, we have a very strong community here in Spain, here in Barcelona. Lots of meetups, 20, 30 people showing up, hundreds of people in the Telegram groups, and slowly more people getting orange pilled. But as a whole, it's over.
Europe is cooked. I've been saying that for a minute. Well, Luke has a funny accent, but he's not actually from Europe. But similar things are happening in Australia. So, Luke, what's your thoughts seeing the ECB basically say, hey, give us your savings, bro. We're going to go gamble it into the casino. You're going to get a better return, man. Trust us. We need to employ, or we need to build up the capital markets, man. Don't you care about the roads, Luke? What's going on over here?
Yeah, so it's hilarious that it's actually the news of bank bail-ins all the way back in 2017, 2018, and 2019 that originally got me interested in gold before I even found Bitcoin. So I thought it was interesting. There was like, if you look at the number of countries implementing a bank bail-in, the numbers start going parabolic in 2017, 18, and 19. And that's because for the first time since the 2008 Great Recession, the banks started going bankrupt again. You saw the interest rates in the repo market spike in late 2019. We saw the yield curve invert in 2019. And all of the banks started saying exactly what Christine Lagarde said in 2013 and what the ECB is saying this week. We need to steal the people's savings. That's what a bank bail-in is. So obviously a bailout is when the bank goes bankrupt and we steal the people's money through wealth destruction. So we print the money, we give the money to the bank. A bail-in is different. A bail-in is when we say, okay, the bank's bankrupt. Why don't we just steal all of the depositors and the savers' money from the inside? It's a little bit more of an overt form of theft. But it's just as bad as the bailout with the printed money and your savings being devalued. So anyway, long story short, I saw all of these bank bail-ins happening in 2017, 18, and 19, and that's what inevitably turned me into a gold bug and then a Bitcoiner. And I just think if you just study the collapse of every Western government or every civilization in history, it follows the exact same trajectory as what we're seeing today, which is, again, why I have such a hardline stance on real estate. Go and study every single collapse of not only a collectivist society, but any Western government. Again, since the year 1800, there's been 52 governments that have reached debt to GDP levels of 130%. 51 of those countries defaulted within 15 years, and default typically means multiple different scenarios. The government goes through hyperinflation to pay back its enormous debt, goes through a period of very high inflation to pay back its debt, or it just outright starts confiscating the people's citizens. It starts confiscating the citizens' money to pay back its debt. So again, if you look, like, this is just, it shouldn't be a surprise. So, like, we've got a 98.7% chance that I think we're living through a global government default right now. And that's because we have about 12 or 13 countries around the world with debt to GDP levels of 130%. Most of them are countries we're talking about today. It's the pigs, like Kenobi said earlier. Portugal, Italy, Greece, Spain, it's France, it's America, Canada, Australia, New Zealand. If you look at the most indebted countries around the world, ask yourself, why are they implementing the exact same playbook? Think about it for a minute. It's all because of that four-letter word. It's debt. They all have too much debt. So what is the solution for too much debt? High taxes. You attack the entrepreneurial or the business owners in a country. You strip all of the wealth out of the business owners and the high earners. We're seeing that in Australia. Wealth taxes, taxes on retirement accounts. Spain just implemented a wealth tax in 2022. France is proposing citizenship-based taxation. You know, America's, you know, doing what they're doing best. Obviously, they're one of the first countries with citizenship-based taxation. And then, so high taxes, money printing, high inflation, woke culture. Again, woke culture is just another excuse to distract the masses. Again, it's bread and circuses. If you give the masses bread and circuses, they won't even realize what's going on, and they will never revolt. It's as simple as that. And then think about the massive big, I need to be very careful with this, but just think about who those countries are letting into their borders, and why would they be letting those people into their borders? Just think about that. The most indebted countries around the world pretty much have open border policies. Ask yourself why. You can get really conspiratorial, and that's going to take you down some really scary paths if you live in those countries, when we start looking at the degradation of safety in the places like London, for example, which is just a horrifying place right now. But also just think about it from pure economic sense. If you just open up your borders and let everybody into your country, this props up the housing Ponzi bubble. So again, I could talk about this for 20 minutes, but I think the summary is pretty much what Kenobi said. You know, owning property in the EU or Australia or Canada or even America, it's really risky because you're just putting your livelihood on the line, so to say. Be careful what I say there. You're putting your livelihood on the line, and you're saying, look, I got half my net worth in this stationary asset. Come and tax it. Oh, you're going bankrupt? You're the government? You've run out of money? Well, here's half of my savings. Come and tax it. Come and take it away. And that's what they will do. They will do that through rising property taxes. You should see the amount of taxes on property in Australia. There's something called stamp duty. You have to pay $20,000 to the government just for buying a home in the first place. Then there's property taxes, thousands, if not tens of thousands of dollars a year. And then now we've got, We've got a retirement wealth tax in Australia. So if you have more than $3 million of assets in your retirement account, if that rises, guess what? You've got to pay unrealized capital gains taxes, even if you didn't sell any of the assets in your retirement portfolio. So again, talk about this for 20 minutes. I think it's just a simple summary. Do not trust the West. They're bankrupt, and they're going to take your money. If you have wealth, why would you have 20, 30% of your wealth in a big stationary asset that the government knows where you keep it? Terrible idea.
Yeah, totally. And actually, Luke, you reminded me of, I don't know if you guys saw it in the chat or you two. Jack Mallers did a great clip the other day, and this idea, and you brought it up, you know, that we're probably in some kind of global financial recession, depression, some kind of global calamity. And I think all of the things you were kind of talking about are obviously factors of the fact that the money's going down, but everyone continues to look at the dollar. And of course, we've all seen this chart here, the purchasing power of the dollar. So I'll bring it up here. And, you know, let me zoom in a little bit here. You can see the dollar's worth since what, like 1930, the creation of the Federal Reserve. Obviously, it's lost 99%. You've heard all these tropes. You can see here is the stock market crash and the lead up of the Great Depression. And then since the dollar's just been decimated. And now we still kind of look at the dollar as an indicator of what's going on in the global markets. Of course, we've been watching the global M2 liquidity supply. But what Mahlers was saying in this clip is like everyone is really looking at it differently, because what was this purchasing power against? What was it measured against? It was the purchasing power of paper money against gold. And this is what you're kind of seeing in this chart, is that your purchasing power of the dollar has decreased against gold. And everyone's looking at the Bitcoin price priced in fiat dollars. But when you look at the gold priced in Bitcoin, it's starting to look exactly what you're seeing with the fiat dollar, which is, this is where you're starting to see that we've probably been in a global depression, recession, whatever you want to call it, for a long, long time, but everyone is just looking in the wrong direction. And I found that to be just like a very powerful clip there. And, you know, just showing you guys the charts here. This is gold priced in Bitcoin. As you can see, it's losing a lot of its purchasing power. Is looking exactly like the Bitcoin or the dollar purchasing power chart here. So, you know, there's a lot of things going around that it all boils down to, like, fix the money, fix the world. A lot of these problems really do come down to, hey, I need to save capital. If I can save capital and you save capital, then we all get richer, as long as there's no one in the middle that is constantly debasing the purchasing power, inflating the currency, so that we all don't feel the pain, but we collectively get poorer. Take back your sovereignty, take back your money, take back your life, stay humble, stack sats. This is the way. This is how we fix everything. Everything, you know, Bitcoin won't fix everything, but if you fix the money, then we can start working on all the other problems. You know, you can't fix a leaky sink if you're just kind of putting tape around the sink. You gotta, you know, maybe probably redo the plumbing here. Simple idea. Anyways, I do want to move on because I want to talk to Kenobi. He's working on something super cool. And, you know, Bitcoin mining and running nodes has been all up in the news lately. And I think Kenobi is part of the vanguard here, helping maintain Bitcoin's decentralization. So let's get into the culture and we will wrap up today's show.
I want to give a shout out to our partner, HIVE Digital Technology. Why HIVE in 2025? Unstoppable growth. As the first ever public miner, HIVE's position to quadruple their global footprint, making them one of the world's fastest growing miners in 2025. And with elite operations that consistently top the industry in Bitcoin mined per exahash, HIVE's now headquartered in the USA. They're lean and mean, they're green and clean, and they're rewriting the playbook on sustainable Bitcoin mining. You can catch the latest buzz at HIVE Digital Tech or at hivedigitaltech.com. I want to give a shout out to our sponsor, Casa. Casa makes self-custody easy and secure. As a Bitcoiner, I care about holding my own private keys, but multi-sig can sometimes get tricky. Casa nails it with a multi-key security. So even if one key gets lost or stolen, your Bitcoin stays safe. And you don't give up custody, meaning no one could access your Bitcoin but you. No seed phrase anxiety, no single point of failure. I've been telling my friends and family about Casa for years. Their UX and UI on their app is by far the best in the industry. Inheritance planning is built in, and they even offer Casa for Business if you're thinking about a Bitcoin treasury. Hit up casa.io today and use promo code SIMPLY to get 10% off Casa Standard or Casa Premium. Head over to casa.io.
Alrighty then, Kenobi, thank you for coming on this show. Of course, as I said in the beginning, you work for Demand Pool, the first fully Stratum V2 pool, mining pool here. Maybe, actually, let's just start with the question. We've been hearing it all around Twitter recently. You know, there's a lot of concerns about Bitcoin mining being too centralized. You know, there's even the concern about the nodes, you know, attack with the nodes and all this stuff. But maybe for the people that aren't as initiated, what is Stratum V2? What are you guys working on over there? And is there a real issue in centralizing Bitcoin mining?
Yeah, so I think the last analogy you used was a perfect example for what's happening right now. So people may not know this, but pools and miners, they communicate with each other. So miners, they have ASICs, they have data centers. It was fun to see Hive and their data centers. That's where they have their ASICs, they have the chips doing all of the mining, the SHA-256 crunching to find the next valid block. But in order to communicate with the pool, which is the ones giving them, let's say, a financial service by grouping a lot of hash rate together in order to like smooth out the variability and the variance in payouts. Well, to communicate between the pool and the miner, they need to use something. They need to use a protocol. Right now, the plumbing in the mining industry is Stratum V1, so the first version, the one created in 2012 by Slush, the creator of the first Bitcoin mining pool, which nowadays is Brain's pool. And he created a system, a protocol that helps miners communicate with pools. But the problem is he did it in a good enough way. He just like put it together. I don't know how much time, but I like to picture it, in his garage, just put it together in an afternoon, and it was good enough. And he just let it rip, and good enough it was. The whole industry started using it, and now it's the standard. Now everyone's using it to our own detriment, as we'll see in the future, because, block size wars happened. We realized, hey, yo, what's going on here? The miners, they have a lot of power, not just the miners, but like the pools and like the producers. We need to start decentralizing this, of course, proof of stake, proof of shit, rather. That's decentralized from the get-go, right? All of these proof of stake networks, they keep being turned on and off because they don't work, of course. Meanwhile, on Bitcoin, thanks to proof of work, we have had what's the number now? 99.99% uptime, and in the past 10 years, it's just been 100%, right? That's thanks to proof of work, and thanks to the decentralization of mining. But we can make it better, because right now we only have 5 nodes, between 5 and 6 nodes, deciding what goes into 95% of the blocks. So if at any time you look at the mempool.space, yeah, awesome. When was the last one? 2013, yeah. So in the past 10 years, it's just been 100%, right? Since 2015 to now, basically 100%. That's thanks to proof of work, which is one of the biggest innovations in the past century, I would say, thanks to Satoshi Nakamoto. The thing is, the way that it works right now, as I was saying, it gives the pools, due to Stratum V1, a lot of power, because they are the ones deciding what goes into the blocks. So at the end of the day, it's only 5 to 6 nodes that decide most of the transactions and most of the blocks, how they look like. That's not really what Satoshi Nakamoto wanted, right? He didn't want hundreds of thousands of hashers, or mercenaries, if you will, and then just a few miners, a few people deciding what goes into the block. No, he said 1 CPU, 1 vote, meaning you have your CPU, you have your ASIC, you have your miner. You get to decide what goes into that block and publish it once you found a valid one, right? So with that, back after the block size wars, everyone realized, oh wow, we fell asleep in the wheel. How did we allow Stratum V1 to take a hold with this key mistake, giving the pool so much power? That's when Matt Corallo, he created Better Hash. It was an attempt, but not good enough, but good enough to get a lot of people involved. So from companies, from miners, from pools and developers, and then also other type of stakeholders, right? But these are the big 3, got them in one room and said, hey guys, what should the protocol, the plumbing of mining look like in the future? Like for the next 1,000 years, what are we going to be using to mine? It cannot be Stratum V1, because it's definitely not good, right? It's centralizing. It doesn't give the power to the miners. And also, as the halvings happen, miners are gonna go from being subsidized or being like emitters of new coins, because till now there have been creating quite a few new coins per block. Till recently it was 6 coins per block. Now it's 3.125. But in 2 halvings, it's gonna be 0.6 something. It's going to be less than a full Bitcoin that what they're going to be creating per block. So they're going to actually start selling the block space. That's going to be the new commodity. We already have hash rate as a new modern day commodity, but now block space, actually space in the blocks, putting transactions in there, that's going to become the future commodity. Because nations, as we were talking at the beginning, right? The US, whenever they want to do a transaction, they don't want to be guessing. They don't want to be hoping, crossing their fingers. No, they're going to subcontract. They're going to have contracts with miners. They're going to be like, look, we're going to pay you this much, and you're going to share us the first, I don't know, megabyte of each block that you mine, stuff like that. So as that happens, Stratum v1 is not prepared for that. Plus, also, Stratum v1, it's not encrypted. Like your ISP, your internet service provider, they can see that you're mining. They can block you at any time, right? It's clear text, right? It's also not specified, meaning like imagine as if the English that you speak and the one that I speak and the one that they speak in the UK was actually different. Not just the accent, not just the funny accent, but like literally different. Like they use different sentences and how they build them. That's actually how this protocol works. It's in a weird way. It kind of works, but it doesn't really, right? And we see it in the between 0.2 and 1.5% of stale or rejected shares. That's basically kind of like the 2% inflation rate of like, oh, it's just how the system works. Oh, 2% inflation. But with mining, we have the same of like between 0.1 and 1.5% of your work will just not get paid. That's part of the problem of Stratum v1 because of how it was built. And then third, it's in clear text. Like the messages in Stratum v1 between a machine and a machine, the ASIC and the pool infrastructure, like the nodes that we have, like it's in JSONs, it's in WhatsApps, it's in emails, and it's also unencrypted. Like anyone can read it, anyone can see what you're sending. So that's not efficient. It's almost like, imagine I'm speaking English now, but in order for us to communicate, I would have to like translate to Chinese. He sends you the information, but not directly to you. He sends it to your translator from Chinese to English, and then now you get the English message. It's stupid. It's stupid. So with Stratum v2, they all got together and they said, okay, the future of mining needs to look like this. And the three main features, I'm going to leave the star for the last, would be binary. So we're going to communicate. I'm going to communicate directly to you in English. It's going to be binary, machine to machine. That also makes the packages smaller. Then we're going to encrypt it. We use modern encryption to like make sure that, hey, your hash rate cannot be stolen, because that's a thing that we know it's never been fully confirmed, but all of the miners, they have stories, and they have heard stories of, hey, I was 1%, 2% of my hash rate, which is like missing, And that's because you have unencrypted clear text messages, shares being sent to the pool. Someone can intercept them and they can just claim them for themselves. But with encryption, that's impossible. The only thing they would see is just gibberish. Nothing to see there, right? That also prevents censorship from your ISP and all of that, because it's just another internet package. Who knows what it is, right? And third, but most important, it enables miner-side block template generation. Basically, miners stop being mercenaries. Miners stop being just hashers. Miners stop just renting out their hash rate to the best or usually the worst bidder, those being the pools, and they become miners again. So you create your own blocks and you decide what goes in them. And that's the magic of Stratum v2. That's what we're doing. But the thing is, we at DMND, we are the first pool to implement it. So Stratum v2, it's a protocol. It's independent of us. Like, it's not our protocol. It's by the community, free open source software, FOSS. And it's actually created by a couple of very intelligent, smart people. Some of them, you may even know them, like Pavlinex, right? He's the project manager, so to speak, of Stratum v2. And actually, our CTO used to be the lead developer for Stratum v2. And the advantage of that is that anyone can go to GitHub, check out the code, start participating, start fixing stuff if they see any mistakes, or just help us build. And yeah, we're just the first pool to implement it, because the thing with pooled mining is that it's a cartel. Like, they don't tell you, but it's not really a free market. Like, I don't know if you remember, but 2-3 years ago, Foundry was going all around saying, 0% fees, pools in the future, they're going to have 0% fees, because of all the ancillary services that we're providing and all of that, which also, anyway, that like they were saying that, but now recently, 3 months ago, right before Mining Disrupt, which is where we met Opti, they actually hiked the fees for all of their clients. So what happened there? They were promising 0% fees, but they had to hike the fees. Well, the thing is that the technology is just one of the vectors of centralization in mining, in pooled mining. The second centralization vector is FPPS. FPPS stands for full paper share, and it's the most common. It's actually the reigning payout method. in the mining space. And the story of it is that it appeared around 2017, 18. And basically what happened is that pools, they were just payment distributors. They were just payment mechanisms, like we all get together and we just need a third party, some independent third party to like distribute the payments so that there's no conflict of interest. I get my fair share, you get your fair share, you get your fair share. We're all happy, and we only get the pizza once the pizza's baked. Once a block is found, then we get paid, right? Then you get to eat. But with full paper share, FPPS, you actually get to eat even if the pizza hasn't been baked, because what happened is, like in Indiana Jones in the first movie, Raiders of the Lost Ark, in the first 5 minutes, he goes into that cave, and at the end of it, there's this like golden totem, and he takes it and he puts sand, right? He took the valuable thing and he just left sand, right? And that's what happened with pools. They thought they were just switching one payment method for another, but what they got is they switched out a working and perfectly fine PPLNS payment method for an insurance product. Suddenly, they went from being payment providers or payment distributors, or however you want to call them, to being insurers. They were providing an insurance policy. But what happens with insurance policies? In order to not go bankrupt, you need a shit ton of cash. You need, in this case, actually Bitcoin, which is even harder to get, right? Like you cannot print Bitcoin. So these guys, they need to get a lot of Bitcoin, a lot of capital to back them up. Because otherwise, let's say you have a streak of bad luck for 2 or 3 days, you need to give your payouts to your miners, but you don't find any blocks. Well, you still need to pay them. Even if you didn't get paid as a pool, you're eating up all of the risk, right? So you need to be capitalized. Otherwise, one day you wake up and it's like, well, I guess the party's over. That's it, guys. We didn't make it. We ran out of reserves. The pool is shutting down. And nobody wants that, right? So they need to have a lot of capital. The capital wants to be paid. There's, like a hurdle rate. So that actually makes running a pool very expensive. Something that should be very easy, just a bit of infrastructure, and once the pizza is baked, you distribute it, so to speak, right? Suddenly becomes very expensive. And that's the second centralization vector, because not everyone has all the dough. Not everyone has all of the coins to actually start a new pool and start decentralizing mining. So that's why the co-founders of Demand, Alejandro Latorre and Filippo. So our CTO is Filippo. He's the lead developer of Stratum V2, or was, although he's still involved, free open source software. Like the devs, they're always like contributing back to the main product, to the main GitHub. They got together because Alejandro, he took 2 different pools to number one. In 2018, he took BTC.com, and in 2019, he took Poolin to number one spot. So he knows how the sausage is made. He's been in the belly of the beast, and he was like, whoa, we need to change stuff. That's how he found Stratum V2. He met Filippo, and he was like, right, whenever it's ready, you give me a call, and we get this started. Because he also knew that pools, they're comfortable. They're chilling. They have their capital partners. They're raking in the cash. They also have hidden spreads. Like they tell you, oh, it's just 1%, but in reality, it's like in the airport exchanges, like money exchanges. You go there and they tell you, oh, 0%, and you give them 100 euros, and instead of giving you $110, they give you like 95, and you're like, what happened there? I thought it was 0% fee, right? Well, there's hidden fees, there's hidden spreads, right? And that's what happens with FPPS, because they need to make money, otherwise they're going to go bankrupt. And they're too comfortable. They're raking in the cash. So they're making a lot of money. They're too comfortable. It's also cartel. Like they're all talking to each other. They don't want to move things. Hey, just let the industry sleep. So the moment that Stratum V2 was good enough to go, like production ready, they partner up and they said, let's go. If we don't do it, nobody else is going to do it. So they decided to launch Demand, and now I'm here talking to you, trying to
let's go. All right. Well, doing the noble work. I just talk about Bitcoin. You're actually helping. I'm just trying to get more people into it. You're actually helping decentralize the network. So I think the question for me, well, I don't mind, but maybe someone in the chat does. They can just, jump on to the website and then connect. Like, how does that work for them? Could they solo mine? How does this all work out for them?
So the thing is, for now, we haven't launched yet. We had we launched, but we're not
in beta
live.
still. You're still in beta.
Yeah, exactly. Yeah, exactly. We're actually doing private testing right now with some of our big miners, corporations that we have contacted that they're willing to like support us. Because the thing with launching a non-FPPS pool, because that's the thing, if you want to just call up Bitmain and be like, hey guys, just give me a new website and I'll be a new pool for you. Perfect. Yeah, you can do that. It's very easy to actually launch a pool like that. And recently we actually saw that. I think it was B Squared network. They came out of nowhere and we're all like, oh, wow, who's this network? Who's this new pool that has like 7 to 8 exahashes? I'm getting a block once or twice a day, And at the beginning it was like crazy, but then we quickly realized, oh, they're just another proxy. Like from the outside, it looks like there's many shops, but on the back end, they're run by the same guy, so to speak, right? And that's what's actually happening nowadays with Bitcoin mining, right? With all of these pools that they claim to be independent, but when you actually look, you open up and you're like, wait, there's only one person here. What's going on, right? So if you don't want to do that, if you don't want to go the easy route, the centralizing route, you need to go the PPLNS route, and that's basically, doing pools the classic way. Just getting enough hash rate together and using maths and statistics to like smooth out the variability, the variance of payouts. But of course, to do that, if you want to do it right, you need to get some big partners. You need to get at least between 0.8 and 1% of the hash rate in order to launch and give the same experience to the pool to the miners as with FPPS, because they also want to get regular payouts because they have bills to pay, they have families to feed, so to speak, salaries, wages, and electricity bills and machines to buy, right? So they want to get paid, and in order to get paid, you cannot be like the new Parasite pool, which, by the way, fully endorsed for if you have a BitAxe, try it out. They have a new payout model. Apparently, whoever finds the block gets a Bitcoin, and the rest just get the rest. Very interesting. But of course, they only have 80 petahash. They have been live for I think a month now. They haven't found a block. If you want to do industrial level mining, if you want to do serious mining, profitable mining, that's a no-go, right? That's a no-go. So you need to get big partners willing to bet on your solution, bet on the future, and do some testing, make sure that everything's right, because the worst thing would be, we launch and then, something goes wrong. That would be horrible for everyone. Nobody wants to see that, because also we represent Stratum V2 to a certain degree, right? Because we're the first fully Stratum V2 pool, right? And we want our miners to get a good experience and to start building their own blocks with Stratum V2, because we believe the technology, it represents the next 1,000 years of mining. With Stratum V2, you can comfortably mine for the next 1,000 years, so to speak, right? And so we want to do it right. And launching a month earlier or a month later doesn't really matter, right? When you're thinking in a scale of hundreds of years, thousands of years, like with Bitcoin, right? So we're first testing with our big miners. We're going to get a lot of hash rate. We have already contacted a few people. Well, big means actually anything above 50 petahashes, more or less, which, hey, in Spain, that's actually quite crazy, because thanks to our great leaders, we don't have mining anymore, which, by the way, also takes me to the blackout. We had a blackout recently. Had we had mining in Spain, that wouldn't have happened, right? We had a blackout similar to the one that Texas had in 2021. Thankfully, there was no cold or anything.
You just melted.
We just had a blackout and for a full day. Yeah, it was hot. But not as hot as right now. And yeah, we had a blackout, and truly, if we had Bitcoin mining, that would have been solved. But anyway, that's besides the point.
Awesome,
so yeah,
man. Well, more power to you guys. I can't wait to see it launch. Actually, I don't know if you can leak it, but is there an ETA so the audience can keep an eye out? What's the timeline here, and then we'll wrap up today's show.
I cannot say too much.
Plead the fifth. Plead the fifth. It's fine by me.
I cannot say too much, but I can say we're aiming for this year. Definitely be live. And for now, we're keeping it private, almost like a private pool. But we're definitely looking out to welcoming more people and having more miners start trying out Stratum V2. So we also have a few things in the pipeline for those curious bees out there that also want to try Stratum V2. We'll see what we can provide in the next couple months. But yeah, we definitely want to launch this year, get it going. But I said 1,000 years, right? When in doubt, zoom out, take it chill. Rather do it right than do it fast, If you can do it right and fast, perfect, great. But rather do it right, And that's what we're here to do. And Opti, before I go, Thanks for having me, man. It's been a pleasure. I've loved it. It's been an honor to be here. And also, I love the community. I love how riled up they get with topics.
Yeah, appreciate it, man.
Awesome.
All right, guys, for the audio listeners, go check out what Kenobi's working on. It's demand.work. That is DMND.work. Kenobi, I know I asked you this earlier on the show, but if people want to get in touch with you, what's your Twitter again? Because I know you just got banned again. So what's the freshest Twitter account?
Yeah, so I mean, on Nostr, you can find me there. I don't use it too regularly yet because I feel like it's not ready. Anyway, but yeah, I'm there. General Kenobi, Kenobi Nakamoto, any of the two should work. And on Twitter, it will be Kenobi General 5, I think. At this point, the 5 tells you.
Sounds like a scam account. Not gonna lie.
Exactly. Sounds like someone's trying to impersonate me, right? But no, it's actually me. You'll see me talk every now and then, do a retweet, whatnot. And otherwise, demand_pool, that will be the Twitter account. That's where we post updates and whatnot. We also try to do stuff on LinkedIn, try to get some of those fiat people, more orange pilled. That's where you can find us.
Kenobi, thank you so much for coming on today. It was an absolute pleasure. Great show. And honestly fitting. We were talking about the EU and you're like, yeah, they're cooked. The ECB's cooked.
We are.
So, man, thank you so much. Hang out behind the scenes for a second while I wrap up today's show. All right, guys, there you have it. This was the Friday show. You already know the deal. Go outside, eat some good food, call your loved ones, touch some grass. The person you're arguing with on the other side on Twitter will be there when you come back. We will see you on Monday. Luke and I will maintain the bullishness on Monday. Do check out all the content we're dropping on our channel, but I'm pretty sure you guys can find Nico at the Bitcoin Rodeo this weekend. I don't know the schedule yet, but Nico's in Canada. He won't be back until probably Tuesday, and then we'll get back to our normally scheduled programming. On that note, it's been your boy Opti. I will see you on Monday. Peace out.
Today's episode was brought to you by BitcoinWell.com, a Bitcoin-only platform on a mission to enable financial independence.